Okay, so what I want to do today is it's Sunday, so we'll just go over some of the pairs and see what we can try to, maybe see some setups that we think will form, or just generally what we think will happen with some of these pairs. I know some of you guys are watching some of these, but these are generally the pairs that I look at for the week when I trade. The US dollar pairs, UJ, UCAD, USHF, and then the Euro crosses. Euro USD, and then the crosses like Euro AUD, Euro CAD, Euro JPY. Same with GBP GU, GA, GC, and GJ. And then Aussie we use just for when we're referencing our EA and GA and stuff like that. I don't really look at Aussie to trade it, but on the H1 you do get some nice patterns and bounces sometimes. Okay, so let's see here. Let's look at so UJ right now. What we have is it was 2 weeks ago. Okay, we had this peak high up here. Okay, so our 3 times ADR on UJ is 216 right now. So what I do is I measure from the peak to the peak. Right. Last week we had the peak low. Before that we had the peak high. So the peak low to the peak high was 256. Pips, so we're over the 3 times ADR. So this, I can assume that UJ has done the 3 levels. Okay, that's how I just kind of ballpark it, right? It's never going to be exact, but that's how I look at it. Okay, so like this would be a level 1 drop, and then down here would be level 2, and then level 3, and then this would be level 3. All of this would be like a level 3 chop. Okay, and then they decide to take it out. There's a level 1, and you can see 3 pushes here too very clearly. 1, 2, 3. And then they took it back down. So right now, what I have for UJ is a level 2 range condition, but it looks like it's coming back towards level 1. So we don't know if it's going to be a reset or not. If they take it down below this peak low, then they might continue down and reset it, or they might take it back to level 3 and then pop it back up. But as it is right now, it's still dropping. So from our peak from last week, this was our peak high last week, we're still trading away from this peak until we see otherwise, right? So this is still dropping, so we're still looking for a drop into next week. On Monday, we can probably expect some kind of stop hunt up here, high, and then a drop, right? That's what we should be looking for. I mean, it could just pop up, false move week beginning. We don't really know what's going to happen, but that's why Monday we usually, kind of just sit on the sides and watch what happens, and then the setups form Tuesday, Wednesday, Thursday. That's when we can pick off our clean setups. Okay, so that's what we're looking at for UJ. Let's look at USD CAD. Okay, same thing. So previous week we had our peak high, which is up here. 3 times ADR is 268 from peak high to our peak low, which was formed actually this week, 320. So we are extended 3 times ADR, more than 268. So this is still in a level 3 range condition. Like we don't see a move up yet, right, for UCAD. So this could still stay in level 3 chop, or this could be, a reset going down. So it can still continue down. Of course, we're still, the EMAs are still pointing down. We're still looking at a downtrend. So this could definitely still go down. So nothing really solid yet on UCAD. Going into the week, like we say on Monday, we just look at Monday and see what it does. If it pops up here and makes its move into level 1, then we can expect, level 2, 3. Stop hunt low, rise, stop hunt low, rise. So that's what we're looking at for UCAD. Okay. UF is a very low ranging pair. You can see the 3 times ADR is only 169, 170, right? So our peak high was up here. I think our 170 was reached, yeah, right here from last week. So our peak low from last week, from the week that just finished, was right here. So this was our 3 levels done on UF. Now it's looking like it's making its rise. So if this is 1 ADR is about 56, so this would be a level 1 rise right here. drop, and then rise is level 2. So if we do one more level, we're expecting one more level rise. This drop right here and this rise could give us our level 3 into Monday or Tuesday. So we'll see what happens on UF for that. But that would be our projection for UF. Okay. EU. So a lot of us are watching EU and seeing what it does. Right now it's still in that range condition, but it's broken the previous low of the week, right? Previous week's low, which was down here. So right now what we could look for, I mean, from this peak, which has been hit 4 times already, this peak down to our low is about 180 pips. 3 times ADR is 222. So we still have a little bit of ways to go to reach 3 times ADR for level 3. So it could still come down to about 200 pips or 220 pips and then come up. Or if this continues down from this point here, we can consider this also a possible reset. Although we don't have a peak yet to give it us, we don't have like a level 1 rise and then a peak to give us a peak reset. So right now we're still looking at EU as a level 2 going into a level 3 condition, right? So this could still go down further into a level 3. Our 3 times ADR is 220, and we're only about 180. So we can still expect it to go down a little bit more and then possibly come up from there. All right, so we'll watch that on Monday as well. Everything's pointing down though. We have this big peak here. We're still trading away from this peak so far. No real pattern yet. I mean, it almost looks like a W is forming here. So right now, this point, if this goes any lower, we do have divergence, right? So if this makes it a W right here and pops up, then that could be the level 1 rise into the new week. So keep an eye on that. Okay, next, EA. EA was also in a ranging condition. EA has, let's see, 295 3 times ADR. Our peak high was also previous week over here. It was kind of a wick though, so but we'll still measure from there. From that to our drop point, it was still dropping on Friday at the end of the day. So my mouse is not cooperating, sorry. Okay, so it was about 260 pips. Okay, so we still have a little ways to go for 3 times ADR. All of that, I mean, that could pretty much be 3 times ADR, but we can still expect a little bit of drop on this. Still no pattern, nothing really that says this is coming up yet. It just looks like it's dropping, right? So TDI is definitely at extreme levels and it's kind of hooking up, but we've seen that where it does that and it still continues down afterwards. So we just got to look for some kind of W pattern before we can really say that this is coming back up. So I still have EA dropping into next week. All right, let's see. EUR CAD, we have this. I said last week that this could have been the peak reset. So this right here, because our 3 times ADR condition was 266, and from our peak up here was already about 270 or 280. So this right here was already 3 levels done according to if you're doing it by ADRs. You have your EMAs crossing, the 200 is crossing the 800 already, and the EMAs are all fanned out here. So this is definitely already in 3 times ADR condition. Sorry, I'm just going to mute everyone here. Hold on one second. Where is the... Oh, I can't find my mute button.
I hope that shows up in the recording.
It's going to, unfortunately.
Really?
All right, mute you all. Okay. Here we go. Okay, so this was our possible peak reset, okay, because this was our 3 times ADR condition. This, we were expecting it to come back up. It did do the 1 level rise up, okay? Actually almost 2 level rises up, but then it came straight back down and it continued to drop through this this low point, this peak low right here. So at this point, what it is to me is a peak reset. Okay, so this would be the new peak, and the new 3 times ADR condition right here, 289, is exceeded here, 266. So right now, what we're looking at in EC is 3 times ADR, level 3, and we're waiting for this to come back up. So right now we don't have significant, like a W pattern or anything that looks like a W yet. Okay, so that's what we'll be looking for going forward in the week. This could still chop around because ECAD and all the CADs in general love to just kind of stay in the trend and go on trends forever. So they can just chop around level 3 for a while before they make a move up. But watch for that. We do have divergence. You can see here, this to this is much lower than this to this right here. This is going up. Okay, so we do have, some notion that this is going to be moving up into next week. Okay, so we can look at that as a possible bullish move upwards. All right, here we go. EJ. Okay, so EJ, we also had a possible reset, which was on Wednesday. We were looking at a possible reset. We were saying that, if this were to go down below this low here, we could look at a reset, and it has. All right, so that's a big shift bar down below this low. So this is also a possible reset. From the last peak high to the peak low down here was 285, about 280 pips. 3 times ADR is 250. So that is definitely 3 times ADR exceeded. This was where we made, where we were expecting this to go back up 3 levels, but it only made it up 2. Okay, so 1, 2 pushes up, and then it made the M, and then it came back down. So this was our reset point. This was the new peak for the previous week. And now looking at this, we have about 240, 250. So we're right at 3 times ADR for EJ, but it's not looking like it's coming up yet, right? So we still have nothing shows us that's going up. We just have kind of a big shift down and then a continuation down. TDI is still showing not much divergence, and it's still showing pointing down, so it looks like we are still going to continue downward for EJ. All right, so still look for moves downward on EJ, but look for possible continuation up later in the week to complete this cycle here. This looks like a nice cycle completing, right? If we can just get a W here, that'd be a nice cycle. All right. Okay, let's see. GU. So GU, peak low last week, previous week was a peak low here. We had a cycle complete from that week up here down to this. This is like a picture perfect cycle here, and then from here to here was about 250, so just shy of our 3 times ADR, but this was pretty much a completed cycle for that week. And then this was our new peak going into the previous week that just finished. Okay, so from this peak now to where we ended last on Friday, about 229, 230. So that is just shy of our 287. So we still got about another 50 pips to go to reach 3 times ADR on that. And that will take us right back to this peak here, this peak low. So we can look and see what they're going to do with GU. It looks like they might take it back down to that level before coming up. So I do expect them to come back down here to kind of catch that volume, try to maybe trap some sellers going down that direction. But we can see what they do with it. Once they hit that level, they could, continue downward, and then it'll be a reset for that week. But most likely what I think they'll do is they'll, take it to this level, reverse, and come back up. So we're looking at this is where our 3 times ADR will come in, 256, 260, yeah, just about around there. It could go down lower, we'll see, but we're showing some positive movement on the TDI. It's kind of pointing upward, but nothing too telling yet, so Monday we'll see what they do with that. All right, let's see, GA. GA was in a range condition just like EA was, so it's been just kind of moving sideways like that. The previous week it was just kind of moving sideways, and range didn't really give us much. 100 pip range moving sideways, right? Same thing with this previous week, 126, 100, and this was news driven, right? This spike here, which brought this up to 200, but the 3 times ADR for GA is 383. This is a very high ranging, very volatile pair. So this can range very wide for a very long time. We don't really have a lot to go on when it's ranging. But let's see, from that peak down here to that peak low was 260 pips. So we still have a ways to go. I mean, this could still continue dropping. It's already at the peak low from the previous 2 weeks. So they could take this down right now, although it's hooking up We have to see if they make a W here and bring it up, or if they bounce off this or this EMA and just roll down, because that's also possible. Okay, so that's what we're looking for, either a move up to, back up to this peak range up here, or they'll take it either this EMA or this EMA and kind of roll back down and complete this 3 times ADR. All right, GCAD, we're looking at downtrend from all the CAD pairs, really. Like this is like what we had on ECAD as well, just a continuous downtrend. This was a little bit more, let's see, from this peak here to here was 300 pips. 3 times ADR is 328. So this was our peak reset from the previous week. Let's see, from here to, oh, this just kept going basically, but okay, down here. So 425. I mean, this is just continuing this trend. This could be the new peak for this peak high last week. Could be the new peak going into next week. And if you can see here, this peak to down to this peak low is 300 pips. Right, so they could still continue this trend. CAD is one of those, any kind of CAD pair, GC, EC, UCAD, when they go on a trend, they just go on forever. And it's heavily tied to oil. So if you're watching oil prices, it's also that's also a factor. But this one looks like it's continuing the downtrend. EMAs are all fanned out, so we're still, we're definitely 3 times ADR exceeded. But the TDI is showing bullish movement and divergence. So you can see here, this is going upwards, and this is pointing down. So let's look for a possible W here, and then a move up, and then we can see if they take it back down from any of these EMAs and roll back down. All right, GJ. All right, let's see. GJ, we had same thing. We had a peak high up here, then it came all the way down here and chopped around for level 3 for a long time, this whole week basically, before starting to move up last week, and then they moved up 2 levels up here. Basically the same thing that they did with EJ, they did with GJ as well. And you'll notice that in the common pairs, they'll do kind of the same moves. So this was a level 3 range. We were expecting this to come up for a long time, and they finally did. Once they did that, they went up about 2 levels, made this M, and then came back down. So this was potentially reset. They dropped down below this peak low. So this is looking like this is the new peak for the reset. So right here, we can count 3 times ADR, 264 pips to the bottom here. 3 times ADR is 311. So we can still expect a little more drop from GJ. Although we do have some bullish divergence on TDI. But I do expect them to take it a little bit further down before coming back up. So we'll see. 200 is just crossed here. So this really tells me that we're still in level 2 down. EMAs are starting to fan out. So we could see some kind of level 3 condition in GJ, but I still do expect some kind of move downward before we go back up. All right, and then lastly we have Aussie dollar, and this has been ranging in just 1, 2, 3 weeks. It's just been ranging like this, no real clear direction, but it has a smaller ADR range, so we do have some completed cycles, probably previously, maybe not from here. So this, from this week previous down to here, this was one cycle, about one. Sorry, that was about 180, I think that was. But anyways, it's been ranging sideways, so nothing really clear, no real clear patterns, but you can see shortened cycles that are completed here, like this right here was a short and completed cycle, and then this right here was a short and completed cycle, and this right here, right? So the patterns are there, they're just shortened. It's not like it's going to always be 3 times ADR. So if we want to continue it, Aussie dollar will probably, this is a start of the new cycle where it's coming up, and then it'll come back up here, either to this point or this point, and complete the cycle up here. So we're still expecting bullish move on AU from here. So this was our level 1 rise. This was a great W pattern on Friday that we noticed here. You can see the triple bottom, 1, 2, 3, and a divergence on the TDI. Advanced, not advanced, sorry, this was just a W pattern. But if you took that trade, it's a nice 40 pip trade on Friday. So 1350 EMAs have crossed. You can probably look for some kind of bounce trade here, and then continue up into level 2 and 3. Okay. Could GJ be a 50 bounce? Let's see. Well, we got a cross already, and it hasn't come back to the water yet. So yeah, it definitely could. So like I said, they could take it back up here to the 50 or even to the 200 before they roll down. But I still think they're going to take it down a little more. So let's take a look at it on Monday and see what they give us. Tuesday, Wednesday, and Thursday, that's when we're going to be spotting our patterns and really attacking. Okay. All right. So that's our week in review. Does anyone have any questions on any of that, or do you want me to go over any of that, any specific pair again? You can type it in the chat if you want. If not, we're just going to go ahead and start the lesson for today. Okay, so what I will do is, let's go over to my screen share. And just pull up this. Okay, does everyone see the presentation? All right, so let's get started. Okay, so today's lesson, what we're going to do is we're just going to review everything that we've learned so far in our webinars. They are our ID50 bounds, our MNW off the Mayo, and our advanced M's and W's. I know some of you are picking up the material pretty well. You are understanding the stuff and getting the concepts. I know a couple of you are still kind of trying to catch up with some of the lessons. So this is really to give you guys a breather and a pause and kind of review everything we've gone over so far and just try to kind of absorb a little bit more. A lot of you guys are sending me homeworks, but there's still a lot of you that are not sending me homework, so I don't really know, for the people that aren't sending me stuff, I don't really know, how you guys are progressing and if you guys are really grasping the concepts or not. So if you haven't sent me homeworks yet, it doesn't matter how late you send it to me. I mean, just send it to me and just show me that you guys are, at least making the effort to learn the concepts so that I can understand, where you are and how I can help you progress if you guys have any problems. Okay, so after this this lesson, there's no homework for today's session. I just want you guys, for the people that haven't sent me homework, I want you guys to send me the homeworks, and if anybody has any homework that they are caught up on, you guys can send me that as well. All right, so let's get into it. Intraday 50 bounce, ID 50 is what we call it, shortened name. This is a trend continuation setup. Okay, it's the first pullback after an anchor formation. All right, so an M&W formation was your anchor, and then it's a first pullback after that and a continuation setup. Okay, pullback occurs in all time frames. On the 15-minute chart, we call it the ID 50. On the H1 chart, we call it the H1 50-50 bounce. And on the 4-hour chart, we call it the H4 50-50 bounce. Okay, so it happens on all these different time frames. If you're lucky enough to catch an H4 50 bounce on one of these days, that will pay you out massively. You just have to wait a long time for it, though. Rules for the ID 50. So we must have an anchor present to the left. Okay, that is important. We need to see a 1350 EMA cross. The first pullback to the EMA must be 25 to 50 pips. Okay, and we like to see a quick move back to that 50, like a big, strong, sleep puzzle vector candles back to that 50. That signifies trapping activity. Okay, that they want to induce people to go in that direction and then take it away from them. So we want to see a fast, quick move to those EMAs. Right now, in the summer months, the volume is a little bit low. So it might be a little bit difficult to see a 25 pip pullback on some pairs that with like a really low ADR range. But generally, what you want to see is that quick move back to the EMA, a bounce off that water, the 50 EMA, and then a quick move down. Okay, so we want to wait for that bounce or trap off the 50, and then we want to see an entry trigger. Okay, like a railroad track, a star pattern, morning star, evening star, cord of wood. okay, or just a simple, a shift candle, right? Close above or below the 13. That's going to be your signal to enter the trade. You also need to see TDI confirmation, okay, which is the RSI signal line crossover, okay. There's also something called the ID safety, okay, which basically happens when you get a second leg of an ID 50, okay. So if an ID 50 doesn't pan out, it comes back and hits your stop loss, and then it moves back down and gives you a second leg, that's going to be an ID safety, okay. So the same conditions, same rules, except the only thing is that we have to see the RSI cross the market baseline also. So we get an RSI signal line cross and also crossing the market baseline as well. All right, so let's look at some examples. All of these examples today in this lesson are trades that happened this week. Okay, so you can go back and look at the charts and see if where I got these examples from. But gold gave us a nice ID 50 this week, and I pulled gold because normally we don't look at gold really, but gold this week was a gold mine. It was a literal gold mine. It gave us lots of different setups, and it just you'll see in a second, but. So right here we have our M anchor out of the Asian session. Okay, we have a 1350 cross. Okay, first pull back to the 50 EMA is right here with the railroad tracks right at the Brinks box or close to it, and close enough to it anyway. Okay, and then right here, this candle shift down below the 13 EMA is where you got your TDI confirmation. Okay, RSI crossing the signal line. That's your entry candle, okay, at the close of that candle. You could wait for a pullback, which it did pull back to the 13, and take that pullback entry. Would have been giving you a nice tighter stop loss there. But your stop loss is going to go right above the railroad tracks up here. And then taking on down, all the way down, you can see it held the 13 EMA beautifully. Never once came close to even closing back over it. And to the end of the session, 80 pips. So it was a very nice trade. Okay, AU gave us a H1 50-50 bounce. So I said, with smaller range pairs like AU, NU, even like UJ, UF, things like that, you can try trading the H1 chart and seeing if you can catch these H1 50 bounces on them, because when you do, they're it's a decent payout. So here's our M anchor right here, 1350 cross. Okay. First pull back to the EMA with railroad tracks. Okay, that should be a signal. Okay, so you see the railroad tracks and then a big shift candle down below the 13 EMA, and this is your entry right here. Okay, RSI signal line crossing the signal line and also below the market baseline, which is a bonus, even though we don't need it. Okay, so this trade, you hold this all the way down. It holds the 13 nicely as well. Right here, you kind of give a little evening star pattern. But you got 50 pips if you're able to hold it down to the bottom here. All right, next, NU, another H1 50-50 bounce. And let's see here, M anchor, 1350 cross. Okay, first pull back to the water. You got a quarter wood here, right? Look at the quarter wood. Shift candle below the 13 EMA. We can't take this trade yet though because hasn't crossed the signal line. Okay, so you have to wait for this shift candle down below the 13 and also crossing the signal line to give you a TDI confirm. So this is your entry. Taking this all the way down gives you 70 pips on this trade. Okay. Yes, this is being recorded, Brandon. All of the webinars will be recorded and put up on the members area in your website. Okay, so don't worry about that. Okay, next, let's see. So we have EA ID safety on this. So this EA setup gave us a whole bunch of different setups. Okay, this was just a great pair that's set up on Thursday and Friday. You can see our M anchor here. This was the trade that we called in the setups group on Thursday. That gave us our M anchor to set up this ID safety. Okay, so this was the 1350 cross up here. First pullback to the water happened in the Asian session. Okay, so we probably weren't able to take that trade unless you were trading Asia. But you can see that it did come down a bit, but then it came back up out of London and hit the stops. Okay, so if you had your stop loss up here somewhere, you probably got your stop loss taken out. And it came up and hit the stops out of Asia. But in the Brinks box, you see the railroad tracks and this kind of evening star formation right afterwards. So that should have been a clue that you might want to get back in that trade. This is also a type 2 London pattern as well, our type 2 pattern. And then our second leg shift candle below the 13 EMA. This is where you would take the trade. This is where you got your RSI cross the signal line and below the market baseline. Okay, it's frozen for you. Okay, it's good. All right, never mind. So that was your ID safety second leg. You see why was it a second leg is because your ID 50 was here. This was your entry here on this signal line cross. Okay, and it did come down a little bit, but then it came back and hit your stop, and then it gave you a second leg. So this was your ID safety second leg. Your entry's right there on this candle because this candle shift does not give you the RSI below the market baseline, and that's where you take your shift, your entry down. Okay, so if you caught that, 100 pips down to the bottom here, all the way to the end of the session, it just kept dying down to the end. All right, so that is the ID safety trade. Okay, so next we did the M and W off the Mayo. Okay, and the Mayo is the 200 EMA. That's Steve lingo. Okay, and what we're doing here is the market makers are creating a reversal pattern off of the 200 EMA on the 15-minute chart. All right, on the 1 hour chart, market makers are bouncing off the 50 EMA after the stop hunt. Okay, and this can happen in any of the 3 levels, but what you're mainly looking for is a setup in level 2. If you are in level 3, you would be trading back into the first leg, and we could trade both directions at level 3, right? But if you have a multi-day anchor or structure, it's not advised to trade back into the first leg, okay? So same entry rules apply for our standard M&W reversal patterns. You still want the second leg to close below the 13 EMA, and you still want the TDI to confirm, meaning RSI crossing the signal line above or below the market baseline. Okay, so some examples from this week. EU gave us a nice one, 5200 cross, you can see right here. First touch of the Mayo was a railroad track at the breaks. Okay, so first leg trapping action. They came down, then they came back up. Second leg was right here, right through the Mayo, and then our entry was our shift candle below the EMAs. RSI crossed the signal line below the market baseline. This was our TDI confirmation. Didn't give us a lot of pips that session, only 25 pips to the end of the day. But if you held this trade into the next day, this thing tanked a lot more. I think it was like it was a lot of pips the next day. There wasn't really a pattern on that EU, but it was like a continuation. So if you were able to hold it, you got a lot of pips out of that. But that was the EU off the Mayo for Wednesday. I think it was FOMC. We're waiting on the FOMC news on that. So not a lot of movement, but still a good trade if you got it. Okay. UCM off the Mayo. This was at the very beginning of the week. Okay, this was July 30th. Came out of the Asian range off the blue tracer. If you notice, the first leg touched the blue tracer, 3 hits to the blue tracer, trapped through the Mayo, then came down as a first leg. Second leg came up, and then a shift candle immediately down over the 13 EMA. Our TDI confirmed with the RSI signal line cross below the market baseline, and this was a nice 65 pip trade that held the 13 EMA all the way down. Okay, and even if you crossed up, so there are 13 EMA exit here. If you exited the trade up here, I still think it was about 40 pips you made if you held it up there. Okay. Another one on UCAD. UCAD gave us a few good setups this week. This was a couple days after, August 1st. This was also FOMC day. Came out of the Asian box. Okay, as you can see here, 1 push, 2 push, 3 push to the Mayo. All right, that gives us our first leg. Shift candle trap. Come back down, close below, and then close back above. And then they gave this pattern here, which is a railroad track and then a pin. Okay, when you see that, that signifies an M on a lower time frame. Okay, so you can probably jump down to like a M5 or like an M1. You can see an M pattern when you see this kind of structure. Okay, so railroad tracks and a pin, and then a shift below the 13 EMA. RSI crossing the signal line and below the market baseline. Nice 40 pip trade here. This was a little bit nasty. This was news, right? So they kind of spiked it down here, then spiked it immediately back up. So if you didn't have your take profit at 30 or 40 pips, and then you got whipped back. You could have exited your trade out here and made probably around 10-15 pips or something like that, but then they decided to take it back down. So that's why you don't trade the news, right? Because it just whips around back and forth. Next trade we have is a GUW off the Mayo. So we have 5200 cross right here. Out of the Asian box, we have a first leg in the Asian box, rather, okay, with railroad tracks completing the first leg, then a close down below, and then a close back above with this shift candle here. This was your entry. You guys can notice here that we have a shark fin out of the band, second leg in the band, right? We talked about the advanced M's and W's. So out of the band, in the band. RSI crosses the signal line above the market baseline on the shift candle. There was your entry. And these are, this was a 35 pip trade if you held it up to the top there. Okay, and blue tracer was here as well. So, I mean, they're trapping through this blue tracer and taking it back down. Okay, so that was GU off the Mayo. All right, guys, next we're looking at the advanced M or Ws. Okay, so we have two types of M and W patterns, confirmed and advanced. Okay, the only difference between a confirmed pattern and an advanced pattern is that the advanced patterns do not close below the 13 EMA between the first and the second leg. Okay, so they'll consolidate in a range, 8 or more candles, before shifting back through the 13 EMA and thereby not creating an apex or a nadir. What that is just the the middle structure of the M and W pattern. Okay, so some examples of that this week we had. Oops, sorry. Where would we find them? Sorry, at the high of the day and the low of the day, right? In level 3 reversal areas. Yesterday high or low, which is the blue tracer. Okay. After the market maker hits the stop hunt above or below the Asian range, at the EMAs, the 200, the 50, and also after the ADR has been met or exceeded for the day. Okay, this is an example that we had on UC, advanced M off the blue tracer. So you can see here it comes out of the Asian range. This is a relatively small Asian range, okay, so 17 pips, kind of small Asian range. And then we have a poke through the box here, right here, just a mini stop hunt for the first leg, comes down but does not close below the 13, okay? So you can see that this first leg doesn't close below 13 here, but if you line it up with a TDI, okay, they do close on the TDI. Okay, so this is your first leg confirmed on TDI, comes back up above, gives you a railroad track at the blue tracer, second leg at the shadow box, okay, and then a shift down below. We can't take the trade until the market baseline is crossed with the signal line, so that you can't take the trade until right here. This was your entry, and if you held it down to the bottom here, it was 45 pips. This was also a news move, so a little bit nasty because they kind of whipped it back up. And for all the people that got it right, that were selling, that were waiting for this sell and got it right, they took that all back right here with this stop hunt move, and then continue back down in the original direction, right? So if your stop loss was up here somewhere, then you were safe. But if not, you got taken out, and this shift candle probably would have been too big for you to enter again. But you might have been able to enter on a pullback and take it down. Okay. All right, next, advanced M off of the blue tracer. Another one we had on GCAD. Okay, so this was on July 30th, July 31st. Okay, so out of the Asian box, we had a move to the top of the range. You can see 1, 2, 3 pushes to the blue tracer, and then an M structure. Okay, so 1, 2, 3 to the M, with a blue tracer trap through, okay? And then this close right here didn't close below 13, but it did. You can see it closed well below on the TDI, okay? So this, and at the TDI extremes, it didn't. It kind of gave you a little poke out of the band, but it's still kind of like on the border there. But it's at the TDI extreme. You got a nice big shark fin here, looking structure, and then a close below the TDI to give you your first leg. No close here on the chart, but that was your first leg for the advanced. And then the second leg here, railroad track with a shift candle down, closing below the 13, also closing below the RSI, crossing below the signal line and below the market baseline to give you your entry right here. Okay, so this was a very nice trade. Down to the bottom, if you held, this was 100 pips somewhere around here. There's like 120 down here if you're able to hold down to the end of this pin here. but a very nice trade. Anywhere take profit up here would have been a nice, you would have hit all of your targets, anything less than 100 pips. All right. Okay. Next, we have advanced patterns on the H1s as well. So you can look for these on the H1s. As I like looking these at advanced patterns on the H1 better because, when I say I look for confirmed M's on the 15, because a confirmed M on the 15 usually means that the first leg is completed on the H1. So I like looking for confirmed M's on the M15s. But on the H1s, I can look for the advanced M's and W's because it's a little bit more stronger confirmation for me. So you can see on UJ, this was that three push reversal that we had. 1, 2, 3 to the high of the day, trapping through the blue tracer. Then we got an M formation here. It's actually a triple top formation here. Okay, but this shift candle here was your entry, closing below the R side, closing below the market baseline and crossing the signal. It's kind of close on this. It's right on the edge. It might have been this candle. Sorry, I put the the line a little bit too one candle back. Should have been this candle right here. The shift candle below the 13. And then it would have been, that's where your TDI confirm would have been. Okay, so you can see we have divergence here as well. All right, this right here is moving up, and on the TDI, it's actually sloping downward. Okay, so when you see a divergence on the H1 on the TDI at the extremes, you got a shark fin out of the band, second leg in the band with the TDI confirmation and divergence. With all these confluences, it's pretty much a lock. So that was a 50 pip trade that you could have picked up there on a nice advanced M on H1. All right, next, gold. We have another gold trade. This was this was NFP day, right? We're looking at gold and seeing if it was going to come up. We had a nice advanced W on the H1. This was a no close below above the 13 here. This was our first leg, but you can see here shark fin out of the band, crossing the RSI signal line, giving you your first leg here. No close above the 13 on the chart, though. You can see it's pretty far away from the 13, not even close to it, really. So no, this was our advanced W. This was the second leg here. Kind of a bullish engulfing candle here with like a railroad track pattern back above. So second leg crossing above the RSI, crossing above the signal line above the market baseline, and the shift above the 13 is where your entry was right here. So if you were to catch that trade, it would be a nice 100 pip trade on gold, just before the Mayo. Okay, so that's it for today's lesson. Those were just a quick review of what we went over. If you guys have any questions on that, go ahead and type those in the chat. I'll go over through any of these examples that you want me to go through, or if you have any questions on the rules or anything, we can happily go over them. Okay, Sarah asked, were these the trades taken in the live trading room? Well, so last week we had all the news happening. So I mainly, we were watching for the trades and we were calling them out as we thought we were going to see them happening. I took some of the trades on the demo account, but we didn't really take any. Well, I didn't really take any trades live because of the news. They ended up playing out perfectly, so I probably played a little bit too safe. But I know some people in the group did take some of these trades and made out pretty well with them. So. Especially, I think some people caught this gold trade, and I know some people caught the like the EU trades as well. What other trades do we call? EU CAD, I know some people caught. EU, some people caught. EU we caught on Wednesday after FOMC on Thursday. We caught that pullback trade on EU, and then EA we caught on Thursday. This trade we caught on that. That was the trade this was the one I posted in the premium setup. And then on Friday, it was NFP, so I wasn't really looking at this, but it gave us a nice, this was a nice continuation trade on EA. All right. Okay, so no questions on this at all? Okay, now, gold. Yeah, gold is a little bit tricky. So let me stop this share, and then I'll go to a gold chart, and I'll show you that. Open this. Share stream. Okay, so let's take a look at gold. I don't even have gold on my chart here. Hold on. Okay. So when you use your crosshair on gold, normally you count the pips like this, and you see you just take off one, right? So this would be 158 pips like this. So let's say the price is 12.18. 12.18 to 12.19 would be 10 pips. So let's look at 12.18 right here to 12.19 would be about 10 pips. Okay, so each point up here is about 10 pips, and then let's say from here to here, like 12.04 to 12.14, that would be 100 pips. Okay, if that makes sense. So it's kind of weird the way the numbers are, because it's just the way it's it's just the way it's counted. But it's like these decimal points are like 1 pip, and then this is like 10 pips, and then this is like 100 pips, and that's how it's counted. So if you use your crosshair tool, it should just automatically, however you use your crosshair tool to measure pips normally, it should just be, that's the way. Like it says 1685, I would just take off that 5, right? And that's 168 pips. Same as like any other pair, like you do, if you take the crosshair down. It says 923, I take off the 3, and that's 92 pips. You're about to trade gold. Yeah, gold is one of those pairs that that'll just take. I mean, look at what it did. Okay, so this was the previous week, right? So this M off the Mayo here, this has been a downtrend forever, by the way. I mean, it's just been dropping like a rock. This M off the Mayo gave you this ID50 pull back here down to this, right? Then another M off the Mayo to this ID50 here, pull back down to this. I mean, just M after M after M after M after ID50 after ID50. Of course, there's reversals back up. Here's the W back up. This could be the W back up, right? It could move back up again, but this thing has just been dropping forever. Be careful with gold though. It's a volatile pair. You can see this kind of stuff happen a lot on gold. You look at this wick, right? It could go all the way down and then pull back like 50 or 60 pips on you in a flash, really, like in a minute. That's definitely not out of the range of what gold can do. So just be careful with it. The cycles and the patterns aren't as reliable on gold as they are with other currencies. But this moves closely in correlation with the US dollar. So if you're looking at gold, make sure you look at what the US dollar index is doing. It'll do the opposite. Okay, so if US dollar index is going up, then gold will be going down, and vice versa. All right. Okay, so if there's no other questions, then guys, that's going to do it for. Oh, one more. Will you explain 3 times ADR? Absolutely. So your indicators on your H1 charts will show you what the 3 times ADR is for every pair, okay? And every pair will have an ADR value up here at the top left corner. And what that is it's ADR stands for average daily range. Okay, so what that means is a pair has a certain range that it moves every day, right? There's certain limitations on certain pairs, and it'll move in a range, on average. So that what this indicator does is it takes a period of 14 days, and it counts the average of the movements of all the pips that it does during those days, and then it gives you an average of those days. So if GU has an average daily range of 96, you can expect it to move 96 pips on any given day. Okay, and what we say, in terms of levels, is that every day a pair will move up or down 1 level, right? So if the ADR is 96 and that's 1 day's movement, then we say that that's 1 level. So 3 times ADR would be your 3 levels. Okay, so that's what I look for when I'm counting my ADRs and counting my levels. I go by the EMA crosses, and I also go by the ADR value. So I look for from peak to peak, like from here to here, Okay, 260 pips or 250 pips, okay, is close to 3 times ADR. So that means it's pretty close to reversing, or or getting there, right? And you can see it did, right? From there, it came down and reversed. Okay, so the same thing we're looking for, like right here, from peak to peak, 230. It's not quite 287. So this still has maybe a little bit more room to move before it reverses. But it's not like an exact science. It's never going to be exactly this number. It's always just an approximation. So that's how I figure out the levels and what I expect the pair to do in the following weeks. Does that make sense? Okay, great. Talal, what should we expect from EU and GU this week? So I went over that in the beginning. I don't know if you were there in the beginning of the webinar, but I did go over what we expect from EU and GU. I just told you what I thought about GU. I do expect it to move probably down at least to this level here to catch this volume here. We don't know what it's going to do at this point. It might continue down from there, or it might bounce up from there, but I do still expect some kind of move down still. Not quite 3 times ADR yet, and coincidentally 50 pips, right, is all we need for that 3 times ADR value. So maybe it might reverse at that point, but we'll have to see. Monday we'll know a little bit more. Okay, and EU, same thing. We don't really know what it's going to do yet. 3 times ADR is 222. Okay, and from this peak down to here, we got about 190, so it's pretty close to 3 times ADR. We could probably see it move down a little bit more. TDI definitely shows that it will come down a little bit more, and then we'll see if we can get like kind of a W pattern here. Like you can see, this is the first leg of a W forming, and then this could possibly be the second leg. We do have divergence. This is kind of sloping upward while this is still going down. But until we get this cross above the 13 EMA, this is still not a second leg for me, right? So we're waiting for this to cross and close up, or let's see if it bounces from this EMA down, or even bounces from this EMA down lower, right? Those are two possibilities. Okay. All right. Anyone else? No problem. All right, guys. So as I said, there's no homework for this lesson since it's all old material that we've covered. But I want you guys, the people that have not sent me homeworks, please do send me homeworks for the other lessons. It's just 5 examples. Okay, any chart, any time frame that you want of the lessons that we covered. Mark up your charts. Show me that you understand, what to look for on the setups. Like an ID50, you want to look for an anchor. You want to look for a 1350 cross, then a pullback. Close below the candle, RSI signal line crossing, all that stuff. Just mark it up for me and show me that you understand the material. That way I know, that you guys are learning the stuff and you're getting it. If you don't show me the homework and you don't show me, that you're putting in the effort, you can't come to me and say that you're not learning the stuff and not learning the material. Okay? Yes, I got yours, Chuck. So, and for all the people that have sent me homework already, I am still in the process of grading them. So, you will get comments from me, either later tonight or tomorrow. So just sifting through those and getting those done. All right, guys. All right. Thanks. So good webinar. I'll see you guys in the markets. Okay, in the coming weeks. And I'll see you guys. For those of you in the trade room, I'll see you guys in the trade room. Okay. Good night, guys. Take care.